Hello there! Today we get to talk about activity-based costing. But first, before we go into activity-based costing, we're going to revisit the allocation rate for overhead we learned in Chapter 2, the predetermined overhead rate. This is the same concept, it's just called a plant-wide method in this example, but the calculation is exactly the same. We're going to look at exercise B here, which is a landscape company. They have two types of clients. They have residential and commercial, and they're trying to figure out the profitability of both of those product lines. Each employee, it says, work a total of 10,000 hours last year. We see the amounts for residential and for commercial, and they paid $10 per hour. It says materials are included in overhead and called supplies, so this means we will not have a separate direct materials account, and all overhead is allocated on the basis of direct labor hours worked, which is also the basis for customer charges. Let's start with this piece here. This piece that says all overhead is allocated on the basis of labor hours worked. Because Part A asks us, using labor hours as the basis, we want to calculate gross margin or gross profit for both product lines. Assume overhead was $50,000. So our first step is to calculate the predetermined overhead rate, which is the estimated overhead divided by the estimated base. In the problem, it told us that the estimated overhead was $50,000. The base, it told us here that overhead is allocated on the basis of direct labor hours worked. And in the second paragraph, they told us that we worked 10,000 hours last year. So that's going to be our base. So my predetermined overhead rate is $5 per direct labor hour. We're going to take this $5 and we're going to use it to apply overhead. When we calculate gross margin or gross profit, we need to know sales or sales revenue, direct materials, direct labor, and overhead that we've applied. Sales revenue, it said that labor hours worked was also the basis for customer charges. It tells us that landscape charges $30 per hour for residential and $20 per hour for commercial. Again, looking at that second paragraph where it tells us about the number of hours worked, they tell us the hours for residential and the hours for commercial. So for residential, we have 6,500 hours, and we charge customers $30 each. And on commercial, we have 3,500 hours, and we charge them $20 each. With direct materials, there are none for this particular company. We could have excluded it. I wanted to include it so that you didn't look at a later problem and wonder why we didn't have materials in that problem. So I'm going to go ahead and make a notation that there are none, but just so that we remember direct materials needs to be part of this calculation. For direct labor, it said in this second paragraph that wages were $10 per hour. So again, we're taking the direct labor hours times $10. For residential, it was 6,500, and for commercial, it was 3,500. Now we get to our overhead applied. Remember, when we apply overhead, we take the actual amount of the base, which is direct labor hours, times the predetermined overhead rate, which we just calculated at $5 per direct labor hour. So we're going to take the number of direct labor hours for residential times our predetermined overhead rate of $5. And for commercial, we're going to use the 3,500. And I've put formulas in here to give me gross margin or gross profit. This is sales minus direct materials, direct labor, and overhead. You'll see residential had a margin of $97,500 and commercial is $17,500. That is the review part. Now we get to the new stuff. The new stuff is we're going to use activity-based costing to apply overhead. The only thing that's going to change is overhead. So sales revenue, direct materials, and direct labor are going to stay the exact same. Only overhead will be different. Instead of using one rate for the entire company, we are going to use different rates based on these three activities, which are identified as transportation, fuel, maintenance, depreciation, and supplies. We have a cost driver which tells us how these costs are increased or what causes these costs to increase. we're going to create a predetermined overhead rate or activity rate for each one using this as our base. So the cost driver is equivalent to our base. Transportation had overhead of $10,000. We need to know the total amount of the base. The base is the number of clients, so we're going to add both of those together, which means we will have set 60 clients. If I were to take the overhead of $10,000 and divide it by 60, I'm going to get an unusual amount. With managerial accounting, there isn't any exact figures, so I could go ahead and go with this number as it is, but I would like to use a pure number, so since it's not going to come out evenly, I'm going to use a fraction in my calculations so that I know I can fix it on my own and I can get an exact number. Fuel maintenance and depreciation will be a little easier. The cost driver is equipment hours. The cost is $25,000. For commercial and residential, I have a total of 5,000 hours. So that's going to give me $5 per equipment hour. For supplies, we're looking at square yards. Commercial had 100,000 and residential had 50,000, which gives me a total of 150,000 square yards. So my activity rate is 10 cents per square yard. Now we get to calculate. We apply overhead and calculate gross margin, or again, also called gross profit. Sales are going to be the exact same that we calculated up here. It's going to be the number of direct labor hours times the sales rate given in the problem. Direct materials, we don't have any for this company. Direct labor is $10 per hour, so we're going to calculate that just like we did. The difference is going to be overhead. So we're not going to apply overhead using one rate for the entire company. Instead, we're going to use these rates we calculated here. These are my predetermined overhead rates or my activity rates. We're going to apply overhead to transportation, fuel maintenance, and supplies. For transportation, my cost driver is clients served. So for each individual one, we're going to take the number of clients served times our transportation rate. For residential, that means my activity rate of 10,000 divided by 60, and I'm going to multiply it by 45 clients for residential. So we have $7,500 in transportation costs going to residential. We have 15 clients in commercial, which means that $2,500 will go to commercial. We can check our work because we want to make sure that the amount of overhead we've assigned equals the amount that we have applied to residential and commercial, and it does, so we're good there. For fuel maintenance and depreciation, this is based on equipment hours, so that I'm going to use the actual amount of equipment hours for each activity. I'm not going to combine them. Residential had 2,000 equipment hours. We said the rate was $5 per equipment hour. So that'll give me $10,000. And we had 3,000 hours for commercial, which will give me my $25,000. And again, I compare and make sure that that's the same amount. For supplies, the amount of cost is $15,000. We've already determined that that gives us a cost of 10 cents per square yard. So we're going to use the 10 cents. And for residential, we had 50,000 square yards. And we had 100,000 for commercial. So we get a gross margin of $107,500 and $7,500. Next, it said, would you advise Landscape Inc. to drop either residential or commercial based on your analysis? So based on our analysis, we can see that the residential area is making a lot more money than the commercial. There's not a tremendous difference between predetermined overhead rate, one rate for everybody, and the rates using activity-based costing. There's a difference of about $10,000, but we're still applying the total of $50,000 in overhead. So the numbers are going to be the same in total. It's just different how we change it to residential and commercial. Activity-based costing gives us a little more accurate figure because we're applying overhead to specific activities based on the individual cost drivers instead of one generic thing like direct labor. Looking at this, I would say that they may want to consider dropping the commercial line because they're making a lot more money with residential, and that would probably help their growth a lot. Hope you had fun with this, and I look forward to seeing you again soon.